Hey everybody, welcome to my channel. Hope you guys are all doing well today. In this video, we're going to talk about Bancor and why I think it's about to go parabolic. When I first started talking about the protocol back in 2020, their TVL was less than 50 million. Today, as I'm recording this video, their TVL has reached 1 billion, and I'm going to outline why I think it's poised to go a lot higher. And to end the video, we'll talk about the BNTEE Shop, and I'll explain why I ended up buying one of the T's. If you're interested to learn more about Bancor through dialogue, make sure you guys check out my Discord channel. It's a great way to supplement everything you guys hear in this video. And if you want to learn about the projects that I'm following or that I'm investing in months before I publish a video, also check out my Twitter profile. Both the links to my Discord channel and my Twitter profile can be found in the description below. With the intro out of the way, let's go ahead and dive into this video. Alright, to begin the video, I just wanted to quickly go over the liquidity loop. This way you'll have a good foundation for the rest of the video. If you're familiar with how this loop works, I welcome you guys to use the timestamps in the description below to forward to the next segment of the video. The goal for any trading venue is to start this loop, because once this loop is started, the liquidity just starts pouring in. Bancor has decided to start here with liquidity providers. Back in September, October-ish, they unveiled their robust liquidity mining incentives, and since then, their total value locked has increased to 1 billion. And to make sure that liquidity is sticky, they've also gamified it by giving bonuses to individuals who keep liquidity long-term and imposing penalties for people that decide to take out their liquidity. This has led to reduced slippage and has improved the pricing. This is especially important in DeFi where we have aggregators. In DeFi, these aggregators are responsible for routing orders to the various AMMs, and the orders get prioritized by slippage and pricing. This means liquidity can be sourced from one single AMM or multiple AMMs. So if an AMM is successful in attracting enough liquidity, they'll get better pricing, better slippage, and therefore they'll get more orders routed to them via the aggregator. This will lead to higher trading volume, and as the AMM generates more trading volume, it's going to generate more profits. In many cases, most of the profit goes back into the pools. This results in the yield going up for LPs, attracting even more liquidity providers to the protocol. And one thing that's pretty unique about the Bancor protocol is that the Bancor token, BNT, is the base pair for every asset. And as a result, as the price of the BNT token goes up, the effect of this loop gets amplified. And in my opinion, the two things that are kind of working against the protocol are the fact that their contracts are pretty complex, which leads to high gas fees. And secondly, to get impermanent loss protection, the token has to get whitelisted. And for that reason, I don't expect Bancor to become the go-to place for long tail assets. Now that you guys have a pretty good understanding of how the liquidity black hole works, let's take a look at what kind of results it's produced. Bancor launched its liquidity mining incentives back in October, and since then, the total value locked has gone parabolic. And to be fair, starting around January, we saw a lot of the assets start to appreciate. We saw Bitcoin, Ethereum, and a lot of DeFi alts start to go parabolic. And remember, BNT acts as a base pair for every token. Back in October, the price was around 50 to 70 cents. Today, it's trading at $5 plus. But now that the pools are getting pretty deep, we're starting to see a little shift here. Towards the end of January, we saw that the volume of the link token on the Bancor network started to grow. They started to eat up more of the market share. Since January, the total value locked and the volume has increased so much that the 1inch aggregator is starting to send more orders to the Bancor protocol. In fact, on February 19th, over 55% of the orders were routed to Bancor. And the volume for the link token on Bancor has grown so much that it's even higher than some of the centralized exchanges. And the trading volume on Bancor for the link token has gotten so high that it now exceeds the trading volume on centralized exchanges. And I think this is just a taste of what's to come. I think at some point we're gonna see these AMMs completely cannibalize centralized exchanges. At the moment, the fees are astronomical, and I think that serves as a barrier to adoption. And at some point, I fully expect the big brains out there to solve the problem. And when we see a significant reduction in network fees, we're really going to see these AMMs start to dominate. Now, if we compare Bancor to other AMMs and other DEXs, we can see that it's number 6 in terms of 7-day volume. It commands approximately 3.4% in terms of market share when it comes to volume. And when it comes to the number of traders on the platform, it ranks as number 10. In my opinion, for now, this metric here isn't as important. I think the better strategy would be to seed their pools with deep liquidity. This way, the aggregators prioritize Bancor ahead of other protocols. And once they have enough volume, once they're number 1 in terms of aggregator priority, they can then work on improving gas efficiency and also enhancing the user experience. After looking at all those analytics, it's clear that their liquidity mining incentives have been pretty successful. TVL has increased 2,000% and monthly swap volume rose over 1,500%. And they've also been successful in achieving stickiness. They've paid out over $20 million in BNT rewards to LPs so far, and over 85% of the rewards were restaked into the protocol. And to further improve on the model to attract more liquidity and make it more sticky, they've introduced the Vortex. The Vortex basically allows all the liquidity providers on Bancor to add leverage to their portfolios. When you make a deposit on Uniswap, you're given a redemption token which represents your claim on the liquidity that you provided. Bancor's model is different from that. When you deposit BNT, you're going to be given VBNT. And if sometime in the future you wanted to withdraw your BNT balance from the pool, you would have to give back the VBNT. And you can actually use this VBNT to buy other assets within the network. Currently, it's trading at 63% of the current value of BNT, which means that if you're going to leverage up with your VBNT, but you have to make sure that whatever asset that you're buying with VBNT or strategy that you're deploying produces better returns than just holding VBNT itself. Otherwise, you're going to end up paying more to get back your locked liquidity. The safer option would be to provide liquidity into the VBNT pool. This way, regardless of where the price of VBNT goes, you'll be profitable. If you guys are looking for a detailed description of how the Vortex works and how you can leverage your assets, I'll include a link to this right up in the description below. Make sure you guys watch this video here. But basically, all you need to do is provide liquidity into one of the pools that are supported by the Bancor network. After you make your deposit, you're going to be given VBNT tokens. You then go over here to swap. From here, I just select VBNT here at the top. And at the bottom, I select the asset that I want to buy. In the first field, I'll just type in the amount of VBNT that I want to use to buy this asset here. Then simply execute the swap and I'll be given my USDT. By the way, you can use this strategy here to short VBNT by converting into USDT. When the price of VBNT goes down, you can use your USDT to buy your original balance and keep the difference. And this is just one strategy or one method to put your VBNT to productive use. I'm sure once more people get involved and they start playing around with the network, they'll come up with even more strategies. Now, that's just phase 1 of the Vortex, which obviously helps make liquidity more sticky because now people can access their locked capital. The second phase of the Vortex, they're going to introduce a small protocol-wide fee that's going to be used exclusively to buy VBNT from the pool and burn it. And you can think of this fee as being impermanent loss insurance that's charged to non-BNT liquidity providers. And it's designed to create new incentives for people to hold and stake BNT. Because by buying VBNT and burning it, you're basically buying BNT off the market, injecting it into the pools, and locking it there permanently, which leads to perpetual buying of the BNT token and the addition of BNT to the pools. And once this is activated, it starts to gain a little bit of momentum for a few weeks to a couple months. We're really going to start to see the price of BNT move, in my opinion. I think the Bancor team and the big brains that are behind this did one hell of a job in terms of Ponzifying the protocol. Now, before I end the video with the BNT shop, I wanted to give you guys some upcoming updates and also share some of my closing thoughts. Now that they've gotten 1 billion in total value locked, they're going to do their best to streamline growth by increasing the caps more frequently and streamlining token whitelisting. This here is a lot bigger than most people think. They're going to allow joint liquidity mining. This will bring more communities over to Bancor and introduce them to the protocol. With the liquidity mining incentives, you're very likely to get deep pools very quickly. And lastly, it increases their odds of improving this metric here. If people from different communities are coming over Bancor to provide liquidity, there's a good chance that they might stick around and actually trade on the protocol. Another way they can improve on that metric is by providing a redesign with limit orders, new trading features, and one-click LP token migration from other AMMs. They're also working on layer 2 solutions to help reduce fees and transaction time. In an effort to expand to other networks, they're building cross-chain bridges. This is going to be very interesting because I'm curious to see if they're going to provide native support or if they're going to do pegged assets like other AMMs. The only AMM project, to my knowledge, that's allowing users to trade with real assets is Thorchain. If you guys wanted to learn more about Thorchain, I'll include a link to my playlist in the description below. Lastly, they're working on a top secret pool design, which could support liquidity amplification on pools with volatile tokens and greatly increase the capital efficiency of the entire system. Not only do they have a lot of things in the pipeline, but other people are seeing their potential. Three Arrows Capital, which is arguably one of the most successful crypto hedge funds out there, started buying tens of millions of BNT this month. And when you get investors like this, they don't just sit on the sideline like retail investors, they actually go out there and do things to reinforce their own success. Whether it's marketing or it's through governance proposals, I fully expect Three Arrows Capital to do everything they can to help pump this token. Alright, to end the video, let's talk about the BNTEE Shop. They currently have 3 NFTs that you can buy, and these NFTs can be redeemed for the actual shirt that you see here. And since the pricing is based on a supply curve, initially when they listed the shirts, they were going for a couple $100s. And as you can see here, they've gone up a lot since they first got listed. I think at some point, some of these shirts are worth $10,000 plus. When they first launched the shop, there were 100 shirts available of the BNT, 200 of the BNVT, and 300 of the BNLM. And what might have inspired the listing of these shirts is socks. These digital socks that were sold for approximately $12 a piece are now trading above $120,000. And these socks were sold according to a dynamic price curve. And because people keep buying the sock, you're seeing this massive price today. And assuming that we see a similar demand for the BNT shirts, you could easily see these shirts sell for $100,000 plus a piece. And unlike the socks, these shirts actually might have some utility. For example, by owning one of the shirts, it could teleport you from 0 to day 10 on the IL timer, give you bonus rewards on the other pool stakes, more token cap space limits, liquidity mining rewards, and if you own all 3 shirts, you could get a 4x on all these rewards. Supposedly, we're supposed to see a formal proposal and vote. I haven't seen anything materialize in the forum. If I do, I'll make sure to keep you guys updated on Twitter. But if we do see this get passed and we get all these utility features by owning the shirt, I can definitely see whales out there buying up these shirts, because if they have huge deposits in the pool, they could easily get a return on their investment through the bonuses the shirts give them. Another boost or catalyst would be putting the shirts in one of the pools on Bancor and then offering liquidity mining incentives on top of that. And I have a feeling that the prices of these shirts are going to be tied to the success of the protocol. And typically the price action you see with assets like these is that it'll remain flat for a while. And because the pricing is based on a supply curve, as soon as you see a respectable amount of volume, the price just takes off. And for that reason, despite buying the shirt at very cheap prices, I'm actually thinking about buying another one. And if you guys are interested in buying, the nice thing is that you can pay in any of the supported assets that you see here. And if you want to sell the shirt for any reason, you can also sell it into any of these assets. Now, after watching this video, if you're still confused about certain topics or you want to expand your understanding, don't forget to check out my Discord channel by clicking the link in the description below. Or if you're interested in one-on-one help, I also offer services through my Patreon. And even if you join one of the lower tiers and you pay $20 a month, you can access my private channels where I publish my moves in real time. And I've also teamed up with a market analyst to provide you guys with real-time market updates. And if you happen to join one of the higher tiers, you can even have a one-on-one dialogue with me. With that, I hope you guys enjoyed this video. This is CryptoOneStop signing up. I'll talk to you folks next time. Bye.